My name is Geraldine O'Reilly and I work at Clio as a Community and Events Manager. I'm delighted to be bringing you today's event, the second of our Making of a Law Firm series. So today's session is going to be all about funding and financing a law firm. And we know that starting a law firm is tough and building your firm can be even tougher, especially in times when you can't always physically meet up and network with people to share support. So we decided to try and bring that support to the community via a monthly event series that will run throughout 2021 and follow 4 law firm leaders who are on the road to building new and successful UK law firms. Today, as mentioned, we'll deep dive into one of the areas that we know a lot of law firms struggle with, and that is funding and financing your firm. Whether you're just starting a legal business or entering a period of growth, it is essential to have a plan in place to fund that growth. And we have brought in some help to help us discuss that subject. Today and throughout the year, it would be great if you could share your support for the series and our leaders on social media using the hashtag Making of a Law Firm. Wonderful. So today we've asked 2 of our 4 leaders from the series to rejoin us for this subject. We've got Natalie Foster, founder at Foster Clay. Natalie co-founded Foster Clay Law in 2020 with the vision to have a friendly, forward-thinking law firm that provides excellent professional service to individuals and businesses, both locally and nationally. Natalie saw a gap in the market for a firm offering digital legal services. Next up, and also a leader in our series, we've got Elena Manukyan, partner at the Injury Solicitor. In 2020, after seeing that legal services could be delivered from almost anywhere, Elena decided to launch her own firm. Specializing in personal injury law and being a small firm, Elena is able to offer clients a personalized service, which you simply don't get from the larger law firms. Our expert for the day is Paul McCluskey, founder and managing director at Gemstone Legal. As former UK head of professional practice at Bank of Scotland and Lloyds Bank, Paul has worked with law firms within all 3 UK law society jurisdictions. Having seen banks shift away from legal sector specialism, Paul set up Gemstone Legal to offer firms a trusted, independent approach to source finance and improve returns on client monies. Paul is also a Law Society approved Lexel assessor and consultant and combines his experience to help legal firms to improve their approach to finance and operational risk management, I should say. Paul speaks and writes regularly on financial factors impacting the UK legal sector. So thank you for joining us today, Paul.
Thank you. Thanks for having me.
Brilliant. Before we get into it today, I do want to share a couple of our housekeeping items. So today's session will be about 60 minutes in length. It will be recorded and available later this week. We want lots of Q&A, so if you have a question, please do pop it into the chat. Use the panelist and attendee drop down and let us know who it is that you want the question to go to. You can also use the Q&A function as well. So what I would recommend is use the panelist and attendee drop down for interacting with fellow attendees on the call, and use the Q&A function actually for chat with our or if you want a question to bubble up to our panelists. And brilliant, and it's really a session you get out of what you put into it. So if the more questions you put in, the more you'll get out of the session. So I wanted to recognise that this session is being hosted by Clio, and many of you will have joined expecting to learn more about our case management solution or see Clio in action. And we won't be going through that in a major amount of detail. So for those that are interested, I'm going to launch a very quick poll, and I'm just going to launch that quickly now, where you can let us know if you're interested in learning more about Clio, or if you're not, please do use the poll option there, and just also remember to not only select, but to hit submit as well, and we can follow up with you if you have questions. And whilst that poll is running, for those that are interested, so wanted to give a little bit of an overview. So Clio really allows you to manage everything from intake right through to invoice. We're cloud-based, so it's really helpful when our society is starting to open up and you're starting to move about. It means you can access your cases from anywhere, whether that be at home, in the office, on the go, maybe even on a beach for those of us that are hopeful for a beach this summer or before it. And once you log in, you have access to everything you need. We also do all of this with a very flexible pricing and pricing model, so month to month or annual subscription. And it really gives firms the flexibility that they often need in those early days to add licenses or reduce licenses potentially with no penalty fees. So I'm going to close our poll in one moment. Just let folks vote. We're at about 70, so just if you haven't voted yet, or I shouldn't say vote, if you haven't selected an option, please do. Brilliant. Okay, so I am going to end our poll. And if you didn't get a chance, just let us know in the chat and we can follow up afterwards. Okay, at this point, I'm going to stop talking for a moment and invite Paul on to pass on his wisdom to us. Paul, I'm going to pass over to you and just let me know when you'd like me to change slides.
Lovely. Thanks very much, Geraldine. Thanks very much. And good morning, everyone. And I know we've got people that are on from different places around the world. So you may not have seen, so for people outside the UK, you may not know that it was only 12 months ago that the Law Society Gazette reported that thousands of law firms would fail due to a lack of cash caused by the COVID pandemic. It's a slide back, sorry. Geraldine, slide back, yeah, just on this one. So, 12 months on, there's of course there's been casualties, but government support has avoided the potential bloodbath within the particular sector. Now, as government support comes to an end, insurers and lenders are still concerned about the failure rate, and we've seen a tightening of the criteria, the acceptance criteria. So insurers are beginning to ask for personal guarantees for LLPs and incorporated firms. And banks, they're tightening their acceptance criteria for funding. So it's clear that we face an uncertain future. So it's going to be really interesting to see how the next 18 months pan out, I guess, for the legal profession. But what is absolutely sure is if you want to thrive, if you want to be a profitable legal practice, then you need to drive consistency, and consistency comes from compliance. So, if you want to be confident in your approach to financial management, in my view, you need to develop a financial strategy that's supported by a solid risk framework. So I firmly believe that finance is never about the money. You should have a clear idea on your policies, your procedures, the operational practices within the business, all of these things which encourage the generation of cash within the practice. Now, compliance might never be seen as an income generator, but it absolutely is a time stealer and can cost you money. And an example of that could be, you think about the number of firms who did not get their approach to cybercrime right, and I've sat in legal practices where you're looking at the cash room staff where they're crying because £1 million has just been stolen out of their account, or you've had instances where there's been a fraud within that legal practice and the insurer does not cover the individual, therefore they're selling their family home just to make good the shortfall in the client account. So done badly, compliance can really trip you up. Now, other examples of that could be within the solicitor's accounts rule 6.1, money that's withheld or withdrawn from that client account must be made available. It must be made immediately available. So if there's a shortfall, that money has to go back. So therefore, are you sure that the policies that you have in place and the procedures you've got in place are making sure that the authorizations and the payments are actually working well? So, how are you controlling your staff? Do you have the oversight, the risk oversight of any of the payments that are going out the door? So, try and avoid external fraud, of course, but also limit internal fraud as well. You should also not be using your client account as a bank. Many instances, I guess, of the Solicitor's Disciplinary Tribunal where they are picking up on law firms who just ignore that guidance and operate their client account as if it was their client's own bank account. And clearly that has concerns. So, by not getting that compliance right, there can be regulatory fines, can be struck off if it's severe enough. So it really is important to get that right. Absolutely. If we can move on to the next slide, please. I just want to really pull this out that as far back as 2013, the SRA spoke about financial stability within law firms. And there's a number of warning signs. I think there's 8 warning signs in total that the SRA pulled out, but there's 3 that we just want to pull out here. So first and foremost, there was drawings exceeding profit. Lots of firms seem to do this in my view. Second point was borrowings exceeding net assets. Obviously never a good situation, as that effectively could mean that you're insolvent. And the third point was borrowings over a certain level. Now, typically that might mean that your debt doesn't exceed 120 days of lockup, or that you're keeping your debt within a controllable amount. And that's quite a subjective one there, isn't it? Borrowings over a certain level. But these 3 points were used by the SRA just to highlight in their view that if you were getting these things wrong, it meant you were not a financially stable legal practice. So if you had one wrong, you could have an amber warning. If you had 2 of these things wrong, it would trigger a red flag, and you would come up in the SRA's watch list, so to speak. Now, you might not have that same approach to, but these warning signs are still as true today as they were in 2013. So law firm stability and getting things right through compliance and through your approach to finance is not something new. So yeah, and if you get it wrong, given that insurers are asking for personal guarantees, funders have asked for personal guarantees for a long time. So if you get that wrong, literally your house could depend on it. If we can move on to the next slide, please. Now, I would say, with COVID happening, probably most firms have fallen into that financial difficulty category. How many of those triggers that you've just seen would you say exist in your firm today? So this is the last day, isn't it? 31st of March, 2021, the bounce back loan finishes today, CBILS finishes today. And, it's been phenomenal, the amount of support that the government has provided to UK businesses, not just legal practices. But, CBILS, there's £22 billion that's been handed out in CBILS, ranging across 92,000 companies, there or thereabouts. Bounce back loans paid out about £45 billion. So an incredible amount of money has been borrowed. And I'm sure the banks are probably worried about the fallout rates that will come from it. But you can see in the top there, the bounce back loan, it was the easy one to get effectively. You had to promise that you were affected by COVID and the impacts of COVID, and the banks were likely to give funds out to you, given it was 100% backed by the government. But after today, that then moves on to new schemes. Now, if you're struggling to pay back anything from bounce back, you can go to what's called a pay-as-you-go, and that basically just extends the term up to a maximum of 10 years. And the bullet points are there for everyone to see. But if you can swap to an interest-only option for 6 months, you can put holiday breaks within there, payment holiday breaks within there, all intended to limit the level of bad debts and to help your firm pay for it. Because some of these funds might have been easy to get, but as a borrower, you're still absolutely liable for it. So you don't want to default against it and have the poor credit history, I guess, that will follow you around after it. After these schemes finish, it then moves to what's called the Recovery Loan Scheme. And that launches on the 6th of April. And I've got a conference call with 1,000 other financiers and bankers through just to understand really what this scheme is going to be. There's the headline information. It will be backed by the government up to 80%. You can take up to £10 million over 6 years. There's multi-products that are available within that. So that will vary the repayment term. So some might be less than 6 years, depending on the particular type of product, but more will become available to the public after the 6th of April. And for me, as a broker, a finance broker, I'm really keen to find out exactly what that looks like. But finance, getting it right is absolutely key. And if we can move on to the next slide, please. So, finance doesn't just need to come from your high street bank, and anyone who thinks that all banks are the same is probably like saying that all colours are the same, and that that just is not true. But there's one thing that links high street banks to the legal sector right now, and that is that they are slowly but surely drifting away from the smaller end of the market. If you're a law firm turning £3 million or less, or actually you don't generate a high level of income for the bank, so you've got low levels of client money, for example, then you will find yourself in a call centre environment. Difficulty there is that if you need to phone up your bank and have a discussion with an individual who understands the nuances of legal sector finance, or actually just the inner workings of your firm and how they can help guide you to be a better business, then your bank is no longer the place for that. There will be small instances, I guess, where there's some banks or some law firms who do have a bank manager who understands the sector, but generally the banks have stopped sector specialism for legal sector. So even if you're the bigger firm, your relationship manager will be a generalist. So I just want to make sure that you're aware of some of these different types of funding options for your business. Now, first and foremost, this is overdraft. And I see so many firms who put all their eggs into that overdraft basket effectively, and they sit consistently within an overdrawn position. With an overdraft, you should come into a credit position at some point during the month or a quarter, whatever your cycle that you're operating. But you should not be sitting in a permanently overdrawn position. I'll give you an example of that. One of my clients that I've been dealing with this week, they got a letter from their bank because they had broken their covenants. They were sitting too far into their overdraft. Some of the performance figures were not as they should be. Now think about it, we're just coming out of the pandemic, hopefully. So clearly they have not performed as they thought they would do when they entered into the arrangement with the banks. And the bank wrote them a letter giving them 60 days to move their account. 60 days. They had £200,000 on their overdraft. They had 60 days to find a new bank. This firm is not performing well, so who's going to give them £200,000 to repay their incumbent bank's overdraft position? So it's really important that you use your overdraft wisely and take out as much of the debt into structured products, such as term loan, asset finance, and so on. But don't live everything within your overdraft position. So overdraft, working capital, you should peaks and troughs, you'll enter back into a credit position at some point during that cycle. Term loans, typically up to 10 years, you're buying a particular item and you're tying the repayment of that term loan over the lifespan of that item. Asset finance, so tax, professional indemnity insurance, VAT, so many firms pay for these traditionally out of their overdraft. And, we've been banging the drum for years. I've been dealing with legal practices for 16 years, been banging the drum for years to lift that type of debt out from their overdraft, put it in a structured product. You're repaying it over 6 months. Often it's cheaper than an overdraft as well. You actually get a flat rate that's cheaper than the overdraft, but provides some headroom for your business. And it's certainly going to avoid the bank seeing you operating at the top end of your overdraft level, considering you as a hardcore borrower, and then, worst case scenario, as you've just heard, write a letter to you and tell you to find a new bank. So you certainly don't want to do that. The key thing, I think, about funding and financing your law firm should come from clients. Now, that doesn't mean stealing client money, which I guess there has been instances where that has happened. But what I mean about that is cross-fertilization of your clients. First and foremost, make sure you're taking on clients that can pay the bill. Secondly, make sure you're billing on time to make sure that you do actually get the cash flow coming through the business. But then cross-fertilize those clients. How many law firms have thousands of wills within their will bank, but have never contacted the firms that contacted the clients relevant to those wills? So there could be lots of opportunity within the legal practice to just to cross-sell, grow their business organically through their existing clients, either by referring them to other parts of their business, but just looking for the life events that happen for their client and managing that. And for equity, you see lots and lots of instances, I guess, where you've got new partners coming on board, they're looking for partner equity loans, new directors looking to take an equity stake within the business. But if you're not a profitable firm, why should they do that? I had some clients this week, four of them looking for £250,000 each to buy into their legal practice, who had never seen the financials of the business. They had absolutely no idea how that business fared within their wider peer group, and yet they were willing to put in £250,000 on the promise that this firm will support them in time to come. So you need to do your homework. You need, and as for law firm leaders, you need to make sure that you have the MI available to provide it to prospective partners, prospective investors into the business. And deposit interest. At this moment in time, banks are talking about moving to negative interest rates. Personally, I don't think you'll see SME businesses have to endure negative interest rates, but I can absolutely see zero interest rates coming along. Now, right now, rates are at the lowest point ever. Banks are paying 0.01% on client monies, but it is still perfectly possible to use a smaller bank, what was traditionally called a challenger bank, if you like. Use those banks and you can have 25 times more for client money. So that's called top slicing. You leave the main operational part of your client operation or your client banking with your incumbent bank. You've got overflow client funds, move it to a smaller banking provider, but they still perfectly secure, still operates as a client account within the SRA rules, as you would expect, but they'll pay you 25 times more. That's incredible, so even when rates were above 4%, there was no ability to move your client account out from your main provider and get an extra 25 times more than your interest. So although rates are low, the opportunity to multiply that income has never been higher. If we can move on to the next slide, please. So what I wanted to do was just to give you some essential tools. Now, when these slides come out, you'll be able to click on these links, and if they don't work, I'll put them in the chat. But first and foremost, in my view, gap analysis. So if you struggle with the policies and the procedures and the compliance or knowing what to do, then you need to take that gap analysis. So this is something that I've built. It helps you comply with the Solicitor's Code of Conduct 2.4, which is all about financial stability. Now, it takes 5 minutes to complete. It will give you a score. There's 30 questions, 5 minutes to complete. It'll give you a score out of 50. And if you need to, you can order a report that will tell you exactly the type of things that you should be doing in your business. So that's the gap analysis, really important. Financial benchmarking, I would think that if you're on this call right now and you're a law firm leader and you don't financially benchmark, you don't benchmark your finances, should I say, then that's a big failing. Every single firm should do this. And I absolutely believe that, because how do you know what good looks like? You might look at your bank balance, you might think, excellent, we seem to be doing well, there's cash in the bank. However, unless you know how you're comparing to your peer group, then you're missing a trick. And do not forget that when you go for funding, banks look at financial benchmarking survey results, and they will measure your business against those results. So isn't it wise to have an idea about how the bank will view you before you actually get there? So everyone should do it. If you do it through the law management section as well, so it's written by a company called Hazelwoods, do it through the law management section. They give you an individual report designed for your business, and you get the full report as well. But you should use that as an opportunity to have a chat with the leadership team in your firm, and what's the things that you can do that have the biggest impact. So the link that I've put there is to an offshoot of that kind of survey. It uses the results from the LMS Financial Benchmarking Survey, but what it does allow you to do is to periodically benchmark your performance rather than waiting once a year to do it. You can do it as you go through the year. So really important. I've got a link there to the British Business Bank. So use that link, go on, you can see some really useful tools around financial planning. And I think it's a great resource. The British Business Bank are completely independent. Of course, they're there to try and help SME businesses improve. And they'll give you outlines about different funding at different stages of your business. So really good link just to have a look through. And then the ILFM at the bottom there. So I am a member of the ILFM personally, cashiers, cash room partners, coffers, members of the ILFM, but they need more. And there's a great opportunity there to have a support mechanism that will talk to you about the rules, the regulations, what's going on, VAT, tax, anything really about financing your business or operating the finances within the business. The ILFM can talk to you about that, and you can get together, they have a drink on Zoom every couple of weeks, and it's just a chance to talk to like-minded people, and they'll have presentations from the SRA or various different speakers that will go along and give them updates on their business. That's it. Next slide, Geraldine, please. I just wanted to leave you with some top tips, and the ones on the left-hand side, the three, I think that those are ones that everyone should do. And the ones on the right-hand side, we can talk through these hopefully as we go through maybe some of the questions today. But I'll just do the three on the left-hand side. First and foremost, keep your clients engaged. Avoid complaints. If they're engaged, they're going to pay your bill. They're not going to give you a great testimonial. They're going to refer you to their friends. Client care is everything, and every firm says they do it, don't they? Every firm on their website would say that they look after their clients, but you'll have to look at the legal ombudsman to say that that clearly is not the case. So make sure that your clients feel that you love them and you give them a great service. I'm sure we'll talk about lockup as we come in, but generally, you want to make sure as a law firm that you are doing everything possible to encourage the cash flow or the collection of cash within your business. And the example that's there is if you're a £5 million turnover, you can reduce your lockup, which is your WIP and your debtor book. So if you can gather cash by 7 days quicker, it's going to free up almost £100,000 worth of cash from your overdraft. So anything that you can do within that business to take billing away from fee earners, give it to admin people and drive that consistency I spoke about, it's going to be really important. And then never overuse your overdraft. I've touched upon that one as well. So that's a whistle-stop tour, I guess, on some of these things. And I'm sure for the rest of the session, we can have a conversation. But, thanks for that. And Geraldine, back to you.
Brilliant. Thank you, Paul. Thank you. Thank you very much. A lot of resources there. Want to remind people we will be sending the recording and also the slides out with all those links as well, so you can refer back to them at a later date. At this point, I want to invite Natalie and Elena on to join us. And Paul, you're going to stick around as well. So want to remind folks, if you do have questions, please do pop them into, if you could use the Q&A function, that will make it easier for us to see them. But you can also use the chat as well if you want to interact or comment on any of the questions. So Paul, a lot covered there. And one question and one thing that I'm seeing and hearing about a lot is we know, and I've heard much around PII becoming ever more difficult for law firms to get in this climate. Is it the same when it comes to lenders? Is there a difficulty there?
I think it will do. I mean, lending's been masked right now by bounce back loan and CBILS, and those finish today. So banks will be thinking about, first and foremost, are firms in a good position to repay the debts that they've already taken? But then how do you then continue to give firms more debt? Are you putting good after bad, so to speak? So I just really see a tightening on criteria, lending criteria come into play. And you've got something called prime preference that comes in play as well. So, you know, previously, I guess, if the bank, if your business failed and the bank was hoping to recoup some of the funds from you through an insolvency position, now the HMRC are, they have a preference over your debt. So therefore, I see banks really tighten their criteria to make sure that they're giving money to people that can pay it back.
Okay, thank you, Paul. And Natalie, I'm going to come to you first. Is your firm's been around for a little bit longer than Elena's. Going back to when you were starting out, is that something that that you did struggle with, or how did you go about sourcing funding for your firm?
Well, just on the PII piece, there's no way that we could have obviously gone forward without knowing that we were able to get PII. So that was a fundamental priority for us. We were fortunate enough to obtain funding for that purpose, but we were, rigorously, investigated as a result of that, which is understandable. We were a startup. We had nothing really to grab onto that was tangible, that was evidence of what we were going to earn, other than the staff that were going to be involved, their history. They took that all into account. We did have an existing caseload for individuals, but nothing to speak of really that you could have described as WIP. So we were able to obtain finance for our PII, which was helpful. In terms of its initial launch, it was a mixture of some personal investment, quite a humble amount at that stage. But again, because of the way in which we do practice, we were able to use the correct service providers to keep our running costs lower. So we, rather than, buying a brand new IT system, having an in-house IT manager, and really, I guess, making sure that every single thing is covered, we started out with a website, address, a limited company, an insurance and our license, and we've evolved from there as our cash flow has grown. But I think you always do live to your means, even though as a business, so as and when things do get healthy, we're realizing that, right, we need to look at this area, that area. But it's almost all been funded from cash, which we're very grateful for. And I think the pandemic has in some way supported our business because of the nature of the model.
And Elena, I'd like to come to you there. Your model is quite different to Natalie's, and maybe you could talk a little bit more about that, and also about your early days, and how I know in a previous call you did discuss about how you went about sourcing a bank, and maybe talk a little bit more about that.
Yeah, so my journey into law firm ownership is slightly different, and I think it's a very simplified version, whereby I started my business with really two sources of finance, and one was my savings. So this is where the pandemic made it possible for me to actually be able to save as much as I could. So during the whole setup process, we couldn't go on holiday, we couldn't really go out and about. So I used that as an opportunity to put as much money away as I possibly could. So that funded a lot of sort of like the initial startup costs. Like I wanted a new laptop, a new screen. I also paid for my professional indemnity insurance up front. Being a personal injury solicitor and running a personal injury firm, I knew that cash flow at the beginning would probably be quite tricky, because I'm a no-win, no-fee solicitor, so I'm not charging any of my clients for any work, and I have to win their case before I get paid anything. So I knew that sort of having that monthly expense would probably be an added stress. So I managed to save up enough to be able to pay for that upfront. You can pay for it monthly. You can pay it over, I think, a period of even 10 or even 12 months in some cases. And then I took out a business startup loan. And that was, I believe, with the British Business Bank. So I took that out as well. And at the time, I think that was really the only option for me, because obviously you can't sort of go to your bank and ask for a loan. That seemed like the best possible option at the time when I was starting out. And yeah, so my sort of startup is quite simple in that sense. Just a combination of saving and a business startup loan.
Thank you, Elena. We did get a question in there, and I think you already got to it, Paul, from Bobby. I'll leave that one there. When it comes to finance and almost looking at like a breakdown of what the costs are in running a firm, what is top of mind? Like what is it that is taking up the good chunk of the finance in both of your firms? Maybe come to you, Natalie, first. You both have very different models, but what would be the breakdown, if rough percentages, without the amounts, I guess?
Yeah, I mean, I can give you it almost exact, because we do measure it kind of on a month-by-month basis. And although the figures change, the proportions are usually similar. Salaries for me, it's around 60% of our costs. I don't think that necessarily means that our salary bill is high. I think it's a good indicator that our running costs are low, which I'm quite pleased about. You know, we have our general kind of operational costs, which I think are about 14%, and the rest are our subscriptions and systems. PII is the second largest outgoing, the repayment for that. We do offer conveyancing, particularly residential conveyancing, which is of course a high risk. We're a startup, so in the eyes of the insurer, they need to accommodate that risk, and therefore I do think that that's led to a slightly higher premium than possibly if we'd have been running for 4 or 5 years with no claims, but I'm sure we'll get there. We did anticipate, and it was in line with our budget. But it's always, yeah, salaries for us, and which is why we have our core staff who are, you know, the kind of heart and lungs of the operation, and then our consultants model allows us to grow our network, support the team with our policies and the systems and various things that they need to conduct their work without adding to our payroll bill. Great,
thank you, Natalie. And we're definitely seeing a lot more talking about the consultancy model as almost like an approach to growth, without that kind of I guess it gives you a little bit of flexibility, a little bit more flexibility. Elena, maybe come to you now. Similar to Natalie, or would you have different?
I would say totally different, because I have no staff. So the only person I've got to worry about paying is myself, which I'm not doing at the moment. Well, I'm not doing very much. So in terms of what I do spend my money on, my biggest expense is probably the repayment of the business startup loan that I've taken out. That's sort of the biggest chunk. All my other expenses are relatively low. I've tried to keep my expenses as low as possible. That was a real priority for me, to keep it as affordable as possible. And there were some things that I signed up for at the beginning of the business that I quickly realized actually I wasn't really going to make full use of it. So I was quite lucky to not be in sort of 12-month contracts. For some things I am, but that was something else that was quite important to me, to make sure I wasn't signing up for contracts that I had to sort of stick it out for you know, a year. So certain things I was able to cancel because I wasn't utilizing them as much as I should have to get value for money. And yeah, I think the other expenses are general prescriptions, like for example, the case management system, having a virtual office space, having a telephone system. I've outsourced my legal cashiering, which has been a really, really good decision. So I've been quite careful in terms of the sort of expenses that I do incur in a business. Anything that I'm not making full use of, I try and reevaluate, reassess, and cancel if I don't need it. What I will say, and I think this is quite important to mention, is that starting up a law firm, it's never going to really be cheap or free. You definitely need to input some sort of finance, whether it's through a loan, through a finance option, or through your own savings. You know, there's no way around sort of paying the SRA fees. When the SRA send you an invoice, you know, they're not giving you credit terms. They just want you to pay for your application fee. You then need to renew that every year. And if you have a client account, you know, there's an added expense, your practicing certificate, your professional indemnity insurance, you know, you need to pay for that. So it's not as simple as sort of just starting a business with no money. You do need some kind of finance and some kind of sort of financial startup amount there. However, after those initial expenses, you can, you know, it's up to you. You can spend as much or as little as you want. You know, you can start the business from your home. You don't have to have a virtual office or an office space if you don't want to. If you're quite happy for your address to, you know, for your clients to have your address, then that's absolutely fine. You don't need to have a phone system if you're quite happy to use your mobile phone. There's obviously things you need to think about, but you can keep the costs quite low at the beginning if costs are a concern. And then obviously as your business grows, as you have more income, you can have a look at putting in those systems and those procedures and spending more money on those things. So it's not necessarily that you need sort of a lot. You definitely need some to start with, but it might not be as much as some people think. It depends as well on the area of law that you're going into. If you're not going into personal injury, you might be able to start billing and actually getting money in relatively soon. It's just, for me, you know, I'm in an area of law where it does take some time to see a bit of a return, but it depends entirely on the area of law that you are planning to set up in.
I think that's a really interesting point, Eleanor, on that. Sorry, Geraldine, on the personal injury, because we obviously offer that service as well, but and also medical negligence, and we're not in any way, shape or form relying on that, or indeed any probate work, because it's a longer term, as any litigation usually is. So I think our view is, if we're doing okay now with our kind of bread and butter that is commercial and residential work, then it stands to be in a good position when that pipeline comes through. And I'm sure you'll think in the same, you know, that once it starts dripping through, you've got your pipeline there.
Once you start settling the cases, now with personal injury, it's just the nature of the work, because you're not billing your clients up front, and the investigation periods take some time, because most insurers will have 3 months to investigate, and they will use those 3 months to investigate a claim and then some. So it can take 6 to 12 months for just quite a standard personal injury case to settle and for you to get some costs in. Now you really need to have some kind of financial backing to be able to see you through those sort of months where you might not be getting the costs in, or you might be getting a lot less. I think a personal injury firm on average takes around 2 years to really sort of stabilize and get that sort of consistent flow of cases and a consistent flow of settlements. So what do you do in the meantime? Well, that's where it's quite important to keep your outgoings and your expenses as low as possible, so that your business has a fighting chance of surviving.
It's a wise approach, Elena. It really is. It's a sensible approach as well, isn't it? You know, why spend money that you don't need to spend? And especially in your line of work, where 2 or 3 years before money first comes through, any disbursements you need to put out the door beforehand, then clearly if you borrow to do that, then the borrower wants a monthly repayment back to it. So where does the money come from to make that monthly payment? And it can only be from your own personal savings. So the choice then is, do you borrow it and pay it back monthly, or do you pay out your savings and don't have the cost of borrowing? And that's the balance, isn't it? That's the balance that everyone needs to consider, and what's right for themselves. What's right for one person might not be right for you, but I think your approach is very wise.
Paul, I have a question there then on, is it a case of are lenders looking at things like that? Are they looking at what practice areas are you in? What type of setup are you? And what sort of questions potentially, how can folks prepare for that if we were
So I think bank credit policies, for example, if more than 30% of your income comes from purely PI or comes from purely legal aid, for example, then the bank's going to be concerned. Not mainly because the rules are changing, legislation's changing within the PI sector quicker than banks can quicker than you can keep up with it. So, if you have been reliant on soft tissue claim, RTA type work, for example, and the banks allowed your overdraft to build up to hundreds of thousands of pounds that I was speaking about even earlier on, because this is what happened with this particular client. They were a PI business. They were allowed their overdrafts allowed to creep up and creep up and creep up, and then bang, when the rugs pull from under your feet for the particular type of work, how do you then meet your payment obligations? And that's so banks are really careful about that, and so they want to have a firm that can afford to pay it back. Sounds stupid, doesn't it? A firm that can afford to pay back the debt, but a multidisciplinary practice, good spread of work, and the financial benchmarking results I spoke about before. They will look to see, do you hit those metrics? Are you overspending anywhere? Do the partners draw out every single penny? Is there any value, any cash retained within that business that can afford a lean period? And who would have thought a lean period would have lasted 12 months? And obviously conveyancers have done extremely well, and there's been other areas of law that have done well, but there's others that have struggled, and law firms have struggled.
I'd like to get to some of our questions that are coming in from the audience. So one here from Will, and I think this will probably go to you, Paul, first. Interested to see if you could enlighten as to the nuances around financing that may apply to setting up an SRA ABS.
Yeah, so I guess your license for an ABS is about £2,500 there or thereabouts, isn't it? You then have a choice on whether you go through the application forms yourself or you use a consultant. So I help a number of firms, go through their new firm applications and just navigate them around some of the questions that the SRA will be asking as part of that form. But it's about £2,500. Ideally, you would fund that from your own savings, I would say, rather than start borrowing it before you even get your application underway.
Thank you, Paul. And Natalie, your Foster Clay Law is set up under an ABS structure?
It is, yeah, it's an alternative business structure. So it's, for us, it was a two-tier application. There was, first of all, the initial ABS application for the structure of the firm, and then there was the personal applications for the individuals, who were the directors, myself and Nathan. Yeah, it was a costly exercise, but we did our research and knew that, it was going to be the case.
Thank you, Natalie. We have a question here from Olga. This is actually for you, Natalie, as well. Had you secured and obtained finance prior to applying for PII?
We hadn't, no. I think that may have been a bit of a backward approach, only because we didn't know how much the PII quotation that we accepted was going to be at the time. It's kind of like going shopping for a house and then seeing if you can get a mortgage to afford it. So in order to manage our expectations, and obviously at this stage, it's so very frustrating because everything is aligned and it's a chicken and egg situation. So PII, without a PII quote, we couldn't apply for the license and the ABS. Without the license, we couldn't apply for the bank account. Without the client bank account, we then couldn't do our CQS application. So everything was so very, it was a domino effect. So be prepared for, some frustrating processes. But I think the key is, and there is no getting around it, you have to do everything all at the same time, compartmentalize it, and just be very structured about where you save all your firm information, because you will be duplicating and duplicating and duplicating the information in different application forms. It's painstaking, but once it's done, it's done. To answer Olga's question, no, we went to a broker. We were fortunate enough that this broker I had known previously, and we discussed our model and what the likelihood of our market share in different departments was going to be. And we put forward an application for a PII. We then came back, and the insurer then went to a finance company that they partner with, which is quite often the case. I'm sure, Paul, you probably know very much about this. And they underwrote the policy, and then they said, look, we'll lend to you. The real stinger was that the broker in question didn't know the requirements of the finance company. He knows insurance. they don't know finance. So then it was handed off to the finance company, and the finance company's initial reaction was, okay, fine, here's the finance. We're like, happy days. It was all in for our forecasts. By the way, we want a double payment of the premium in month one, which floored us, if I'm honest, because with it being at that point the highest, so just make sure you get a schedule of payments, and that you know exactly when that outgoing is coming out, because it's highly likely to be the biggest outgoing if you don't have staff. So yeah, and the date does change as well. It can fluctuate according to bank holidays, and as we all know, the slightest change in a date for a direct debit coming out that's that large makes a huge difference as to, you know, what you want in terms of where your completions are going to be, and just making sure you set that cash aside.
Thank you, Natalie. We have a question here from Charlene, and it's kind of getting into PI, and just wanted to advise everybody on the call that we're planning to do a PI session next month. I know there's a big PI well, maybe actually it's PI insurance. Yeah, PI. Yeah, sorry, apologies, I was misreading that. We're getting into April 1 is big renewal. So we're going to be running a session next month, but we're going to take this question now. Did any of you have any problems with PI insurance, and how can we ensure that our policy is more robust for a new starter firm? Elena, I might come to you for that one.
Did I have problems? Yeah, I did. Mainly not so much. I mean, I started sort of applying for professional indemnity insurance in April, around probably, yeah, this time last year, just as we'd entered the first nationwide lockdown. So I really didn't give myself a good start in that sense. It probably picked one of the worst times that you could possibly start making inquiries. So the first quote I got was just unaffordable for me. It just made me think that it's not so much that it's a one-off payment, it's the fact that this is going to be repetitive for the remainder of your business. You know, it's not like you just get one quote and that's it. It's every single year. And how quick does time fly by? So you've just got to think that this is going to be the same type of, you know, disbursement and expense that you're going to have, you know, in a year's time. So if you know, the first quote I got was really, really high, and it just made me think that, you know, I can't afford that now. So I'm going to either have to save a lot longer, have to put off when I start the business, or I just rethink the whole idea in general. So what I did is I just kept sort of looking and approaching different brokers, and then I did eventually get a quote down to you know, it reduced by more than half, and it made it possible for me to be able to start the business. And it's not that my business model had changed, or my business plan had changed, or my predictions had changed. Everything had sort of stayed the same. I just approached different brokers, and I was able to get a much better, more affordable quote. Plus, knowing that I wanted to pay it up front as well made a difference to me, in that it had to be affordable. So yeah, that was sort of my biggest issue, but I did manage to get it down to an affordable level.
That's an incredible difference, isn't it? Cutting it by 50%. It's huge.
Yeah, well, it was eight. I mean, I can reveal the figures. I mean, the first quote was just over £8,000.
Yeah.
And I eventually got it down to £3,080.
Yeah.
So it's a huge difference. And I don't know whether it was the case that it was probably took me an extra couple of months to get the quote of, you know, to get the quote down. I don't know whether that played a part, or whether it was just a case of finding a different broker who was able to source it from a different insurer. But that made me feel a lot more confident, and it wasn't just that one-off payment. Like I said, it was the fact that, you know, in sort of the next you know, 8 months time, now for me being 4 months in, what's it going to be? Well, you know, I'm much more comfortable with a £3,000 quote if it stays at that level than looking at a possible payment of £8,000. So a huge difference, and it's what made it possible for me to start in December, as opposed to possibly, you know, having to put it off to be able to save that £8,000.
Yeah, you can see why having these policies, having policies in place that keep clients happy, for example, you know, keep that consistency, as I said before, stop the complaints, because for future years, you know, what come the point that you're heavily invested in your business and you're knee deep in debt to the banks or the funders or whoever it may be, and if your insurance is pulled, then suddenly your livelihood goes with it, doesn't it? You know, and then, you know, it makes it even more difficult to pay that stuff back. But 50% reduction is incredible.
Yeah.
Searching around, good bargain hunting.
I think it's worth mentioning as well, Paul, that there's a temptation with anyone that's starting up a law firm that you know, they talk to everybody, every broker going kind of a money supermarket situation, but that sometimes it can be really detrimental. Like any kind of credit application, it leaves a footprint. Whether you're a limited company, partnership, sole practitioner, it can have an adverse effect if you apply to numerous different brokers. So I personally would always suggest go on recommendation. Usually if you know a decent financial advisor or, you know, a decent mortgage broker, you know, a specialist within the sector, a managing partner or whatever, that's used X person for 10, 15 years, it's a good indicator that they're quite reliable and they get good deals. So try and avoid casting your net too wide because it could have an adverse effect on your premium.
I've seen that firsthand, actually. Another client we were trying to help, PI business as well, actually, could not get insurance. You know, went round a few different brokers, could not get insurance. This was just at the October renewal, actually, to get insurance in January, but wanted to start our law firm in January. Couldn't get the insurance proposal form beforehand, and you know, was just hunting around for any solution she could have, really. And then stumbled upon a broker that took the time to fight her corner, and she got the insurance, and off she goes now. She's now ready to start her business.
Thank you, Paul and Natalie and Elena. I'm conscious that we're coming up on 12 o'clock, so I do want to start to round out our conversation. We are getting a couple more questions in. What I might do actually before we jump into those questions, if you have a few minutes after 12, do you all a few minutes after 12 just to finish off those questions? One thing that I did want to ask is, what is one top tip you would give to firms struggling with getting a handle of finances right now? One tip, if you could focus in on one. And we'll come to Paul, you first. I know you've shared a lot.
So this is going to be self-promotion here. So if you're struggling getting finances, it's because, you know, there's a particular reason in your business, and if you don't know what that reason is, then you need to find out. So I've put that gap analysis on. That will help you understand what you're good at and what you're not, and it'll lay bare what you need to do in order to improve your financial position, your approach to finance. That would help you.
Thank you, Paul. Natalie, come to you next on that question.
Well, from our perspective, credit control is massive. We make a point of having a certain percentage of monies on account. We just make sure that our terms accommodate that we're able to interim bill where the regulations allow on a monthly basis. And it's more of a drip fed situation rather than, you know, unfortunately, Elena doesn't have that option, but with the items that we do, with the departments that we do have that option, it's interim billing. If anybody's late, then we have a very strict debt protocol service that's internal, and we do chase that payment. I think a lot of firms take their eye off the ball with that, and there's the perception that you need a very accounts staff heavy team to do that, and you don't. You just need the right letters, the alerts, and the process in place.
Thank you, Natalie. And Elena?
Yeah, for me, it's been about just getting comfortable with my cash flow predictions and really just keeping an eye out and staying on top of my expenses and getting really comfortable using Excel and seeing where the money's going, seeing where I can cut back, you know, tighten my belt, you know, cut back on expenses that I don't need. It's just a case of not burying your head in the sand as well. If something isn't going right or you're not making the costs, address it. You know, if there are expenses, you know, can you spread them out? Like, for example, I'm getting help on my compliance side of the business, and you can pay for that on, you know, in monthly installments. It doesn't have to be in one lump sum. So it's just about sort of finding finding, I guess, innovative solutions to certain problems. But I think that all comes from knowing your position, and the only way you're going to know the financial position of your business is if you study it. You know, I look at my cash flow the same cash flow that I used when I was doing my business plan and applying for my insurance. I still use that. I mean, it's changed completely, but actually the expenses are really, really, really useful. And I know exactly sort of what's coming in and what's coming out every single month. When I leave that and I don't look at it for a week or two, I do start to feel really anxious and really panicked. And I think, you know, are there any surprises that are coming up that I've just completely forgotten about? So it's about becoming comfortable with numbers, which doesn't come easy to us legal folk. But I think you can't avoid that. You have to just get your head around it and tackle any of those issues as soon as possible and head on.
Thank you, Elena. And I think that actually rounds it out nicely, Paul. It rounds it up into something that I found on Paul's website, which actually is a quote, and correct me if I'm taking it wrong, but firms must focus their efforts to develop the cultural approach to cash management supported by solid risk processes and procedures. So it's about taking that cultural kind of shift and change in mindset to be focused on that. So, apologies. And Paul, did I misquote? Is that everything?
No. I was agreeing. I was saying, yeah, it's about how you approach finance. It really is your cultural approach.
Brilliant. So we are a couple of minutes over. If you do have to pop off, feel free to. We'll be sending you the recording. There is one question that I wanted to cover off here from a bull who seems to be in a bit of a change of setting that's happening. So wants to know, and I'm going to put this question to you, Paul. If someone's set up as a limited company and they're the only shareholder director of the company, so an LTD, and then they personally set themselves up as an LLP with the company LTD, would that be an LLP structure or will it be considered an ABS structure?
Yeah, I don't know. There's more questions. I'd have to find out more about the situation before you can going into partnership with yourself, limited company, 2 directors, you as an individual is one, and your LLP is another, and you are within that LLP. I need to understand more about that LLP, what's it all about. If he wants, if Abul wants to send me a note separately, I'll happy to respond, or we can get his details, Geraldine, and we can send back to him.
Yeah, we'll connect the dots there.
Yeah.
And finally, just wanted to give a big thank you to Paul, Natalie and Elena for joining us and for sharing such insightful thoughts on our subject today. A lot to cover, a lot of questions still out there, but we're hoping that we did help some people on the call who are going through some of these struggles right now. And we will be back next month for our next session. Thank you to everybody for joining us, and take care.
Thank you for having us.
Thank you.
Bye.
Thank you. Bye-bye.
Bye.